Ever feel like the energy markets are broadcasting from some alternative dimension? Well, buckle up because the data we're seeing is stranger than fiction. And around here, we decode the glitches. I'm Mark Roach, and welcome to another transmission from the bleeding edge of the energy reality. The crude markets have been sending mixed signals since last Monday, with WTI bouncing between technical support and resistance like a drill bit hitting alternative layers of shale and limestone. We closed Friday at 77.82 per barrel, a number that tells a story of resilience wrapped in uncertainty. Well, but here's where it gets interesting. That price point represents something deeper than market sentiment. It's the introspection of geopolitical chess and geologic reality. Let me paint you the real picture. U.S. production has been remarkably resilient despite the Permian's geologic challenges that we've been tracking. Output held steady at 13.1 million barrels a day last week, just 100,000 barrels below the all-time record set in February. Now think about that for a moment. While the headlines scream about instability, American drillers are quietly rewriting the rules of what's possible. The rig count tells an even more fascinating story. We're sitting at 621 active rigs nationwide, down from 806 that we saw this time last year. But here's the glitch in the matrix. Production efficiency has increased by 23% over the same period. We're drilling fewer holes and pulling more oil. It's like watching evolution in real time compressed into quarterly earning reports. Now let's talk about what everyone's whispering about, but few understand. The global supply chain is experiencing what I call adaptive fragmentation. Venezuela is attempting a comeback with production creeping toward 800,000 barrels a day. Iran's playing geopolitical hide and seek with approximately 1.3 million barrels in floating storage off their coast. Meanwhile, Russia's learning to navigate sanctions through what can only be described as petroleum ballet. Complex, risky, and surprisingly effective. But the real story isn't in the headlines, it's in the data patterns that most analysts miss because they're too busy reading the same recycled reports. Natural gas has been absolutely wild. And I mean in the most technical sense. We've seen price volatility that would make cryptocurrency traders nervous. Last month's injection numbers came in at 72 billion cubic feet, well above the 5-year average of 68 billion. Yet prices dropped 12% in the following week. Why? Because the market is finally acknowledging what we've been saying for months. Storage capacity isn't the bottleneck anymore, it's infrastructure. Adaptation is. We've got terminals coming online that can handle LNG exports at rates we couldn't have imagined 5 years ago. The Freeport facility alone is processing 2.1 billion cubic feet per day. Now that's enough natural gas to power Houston for 3 days. Here's where things get genuinely exciting, though. The renewable integration story isn't what you think it is. Solar capacity additions hit 18.4 gigawatts in the second quarter, a 75% increase year over year. But the real breakthrough is happening in storage technology. Battery deployment is tracking a 4.2 gigawatt hour, which means, for those of you that don't know, it's finally approaching the tipping point where renewable intermittency becomes manageable at scale. The grid is learning to think. Smart meters are talking to smart appliances, which are negotiating with smart vehicles, all orchestrated by algorithms that make energy consumption decisions in microseconds. We're witnessing the birth of an energy ecosystem that's more like an organism than a machine. And I've spent navigating this the diverse corners of the upstream oil and gas industry, from boardroom battles to witnessing occasional fistfights on rigs. In the petroleum club, where I've seen near fistfights between negotiators in back rooms between these oil men and financiers and lawyers. And I can tell you that what we're seeing now isn't just another cycle, it's a fundamental transformation disguised as market volatility. The traditional metrics we've relied on for decades are becoming less predictive by the quarter. Inventory levels that used to move markets now barely register. Weather patterns that once drove seasonal trading are being overwhelmed by geopolitical variables that change daily. The old playbook isn't just outdated, it's actively misleading. Consider this. Last week's API inventory report showed a draw of 5.2 million barrels, which historically would have triggered a significant price rally. Instead, we saw a 2% decline. Why? Because traders are now pricing in factors that didn't exist 5 years ago. Chinese strategic petroleum reserve policies, European energy security concerns, and renewables substitution rates that are accelerating faster than anyone predicted. The supply side is where things really get interesting. U.S. shale producers have achieved something remarkable. They've decoupled growth from pure drilling activity. Enhanced completion techniques are extracting 40% more oil per well than comparable wells drilled in 2019. We're witnessing efficiency gains that would have been considered impossible by conventional industry wisdom. But here's the paradox. As we get better at extracting fossil fuels, we're simultaneously accelerating their obsolescence. Electric vehicle adoption crossed 8% of new car sales last quarter. Heat pump installations are up 67% year over year. Industrial electrification projects are being announced weekly. The message becomes clear. Adaptation is non-negotiable. Tomorrow's winners won't be those drilling the most wells, but the smartest wells. Technology, efficiency, and disciplined capital allocation is the new currency in an industry evolving faster than conventional wisdom acknowledges. So where does that leave us? Well, we're standing at an inflection point where the energy landscape is being redrawn in real time. The companies and countries that recognize this shift aren't just preparing for the future, they're creating it. The next transmission promises to be even more revealing. The data never lies, but it does keep us guessing. The future always arrives with static. Tune out the noise, tune in here. I'm Mark Roach, FutureWise Energy. See you next broadcast.